Morgan. Seok Gil, thank you so much. Good to speak with you this morning. So we finally got that cut, and as you pointed out, there was still that small whisper of November being the first cut for the BOK, but it certainly looks like we got the hawkish cut rather than a dovish hold. What do you think really moved the needle for the BOK this time around?
Yeah, thank you very much for having me here. Actually, from April meeting, we have been expecting the BOK to cut in Q4, not deciding whether it is October versus November, because it's really a toss-up decisions. If based on the macroeconomic backdrop, including the growth and inflation, then yes, there was a good rationale for them to move in Q4. But I was thinking that the decision between October versus November may highlighting their signal on the future rate cut cycle. And based on the August meeting details, then I thought that it may be more hawkish messages should come from, because of the lingering worries about the household leverages in the medium term. But it turns out to be in October cut, and that's understandable. And it's not that surprising, because we thought that it's either October or November. But at the same time, though, I think the BOK had to deliberate between the manufacturers, including the Fed movement and also the external environment. It's now opening up some buffer for them to move now. So I think that they just took the opportunity to move now.
Where do you stand in terms of the South Korea's macro picture? There is really a lot of negative market views out there on the Korean economy, especially with the semi-cycle expected to peak out or already peaking out. Where do you stand?
Actually, if you just put your weight on the output gap, then in our estimate, the output gap has turned positive. And inflation is now at the target. And so if just putting our weight on the output gap and inflation, actually it's in the neutral. So I would say the BOK's argument for cutting rate is not responding to very weak the domestic demand or etc., but that's normalizing their policy stance, which was above the neutral rate to a degree. So I would say it is approaching the neutral rate instead of the cutting to the beefing up the domestic demand in a meaningful way.